Okay, everyone, welcome back to episode 22 of Beyond the Headlines, where me and Steve take a deep dive into the news happenings this week, but actually take a look at what the charts are saying, what the footprints in the sand or the technical analysis is showing us. A pretty light week for what's happening, but a lot of interesting lawsuits. So, what last week's episode was kind of international. We talked about Japan, we talked about China, we talked about a lot of the stuff that was happening, or France too, a lot of stuff that was happening there. This week looks like everyone's getting sued, so that's going to be interesting as well because obviously neither of us are legal experts, but we can read what's going on, and more importantly, we can read what's going on with the stock. So let's get started. We're actually going to get into right away this CrowdStrike news that's now been 3 weeks in the making, and a little bit of a pat ourselves on the back, but more importantly, I want to talk about why me and Steve independently arrived at the same opinion, right? This CrowdStrike news was happening right here on this candle. And you can see ever since then, it's just been an absolute slugfest. And I remember on this candle, me and Steve said, no, we're not buying this dip. We're going to wait for some sort of strength after this dip, even though I still like this sector. And the reason we said that is that lawsuits and DOJ investigations and all of this take a little bit of time to develop. So, to summarize, anyone who hasn't seen the prior episodes, what happened here with CrowdStrike is Microsoft pushed out some kind of update. I think we've all been through this before. You wake up, your computer updates, and something that you did all the time ends up breaking. That happened, but with CrowdStrike, it happened for everybody. So we had airlines and railroads and banks and brokers and everything broke only for about a day till they fixed everything. But still, that's a long time, especially when you're talking money. So, one of the many lawsuits that seem to be happening is actually Delta Airlines is now suing CrowdStrike for $450 million. And what they're saying is that for $450 million, we are having basically, you had to shut us down. We had an entire day in which you shut us down for flying. So that's the amount of money we're out. And we talked about this all the time. And again, this makes perfect sense that this kind of stuff happens. So what we need to do is we need to kind of take a look at CrowdStrike and I think take a look at Delta. And with both of these, I think we're both going to come to the same conclusion. But the market certainly isn't pricing in right now, I would say, a $450 windfall for Delta. So they don't think this will be an easy slam dunk win in the courts. And then CrowdStrike continues to bleed. So, Steve, is there a point where you kind of hold your nose and buy here? Or are you still in the same camp where it's time to wait and see?
No, I would not buy here, and I'm going to go ahead and take a leap of faith and share my screen because I see something that just probably easier for me to show than for you to mock up.
Absolutely.
So there's my screen. Hopefully it's shareable and doesn't block us up.
Let's see here. We're going to
We're
go right here. There you are. So far,
looking
so
at
good.
Delta as
Yep.
as Director Michael finds Delta. And the reason I did that is you see earnings as the yellow stripe. Okay, took a hit on earnings. That 200-day moving average is a bedrock of foundational support. Bounced off it two or three times. The fourth or fifth try broke through it. You see a pinch play going on there. I'm looking at the screen. I might as well be annotating. You see a pinch play going on right here.
Hmm.
And yesterday was a fail. This close below, all bets are off. This is a broken chart. You now have every single moving average coming down to meet it. And before I give it back to you, I wanted to also pat ourselves on the back again. What was our 2 weeks ago, Michael? What was our major message to the new traders and old traders alike? When bad news strikes, you don't pop in on day one or day two. You wait for
Hmm.
day three or four. You start to see, hey, this thing doesn't really have much left. I can't even get a green candle out of this thing. Let's see what happens when the 10-day moving average comes down. Oh my God, it's a gap down again. So if anybody out there kind of heeded the advice of just standing aside like a bull, just let a matador letting a bull just run through, don't take a position, don't stand in front. When these gap down horrible news events occur, they can drag on and just bleed for days, and that's a great example here in CrowdStrike. Did you want to look at another airline before I gave it back to you?
Well, I think a good example, if you bring up Boeing, I think a good example was that too. They had the same kind of issues where you saw some issues occurring. If you just scroll back a little bit on the chart there, that was the same idea, right? They had that massive gap down that happened all the way up at $200. I remember a lot of people saying, "Okay, hey, I'm
When
gonna, yeah, that gap down there. Oh, it's a good time to buy the dip. This is a great
is this
company."
when the
Blah blah
doors were
blah.
blowing off of planes at
Yeah,
30,000 feet?
yeah,
Okay.
and you can just see bleeding all the way down for the same reasons that you were just talking about, Steve. Is that more news happens? So once you shine a light
Look
on a
at
lot
that.
of these companies, they find out so much. Yeah, it comes back up, retests that 200,
Just
and
and that was an earnings kiss too. It came up after earnings on a kind of a head fake. Goes to show you head fakes can go in both directions.
yeah,
So you don't want to be a buyer here. You don't have much room to go with that 200-day. Yeah, so that one in Delta is just a broken chart. That's a beautiful example of a pinch play, not using anchored VWAP, but just good old school SMAs.
yeah.
That's ugly. That's a broken chart,
Well, yeah.
right?
So again, I think we both agree here with this crowd strike is that if you're interested in a move like this, then you got to wait, right? Use the moving averages like Steve does. Use support resistance like I do. What I'm be looking for to buy something like this is a bounce. Then when that bounce pulls back, does it make a higher low, right? Or does it right now we're seeing a little bounce and then it makes a lower low and then a little bounce and it makes a lower low. You want to see a bounce and then dig in somewhere, right? Show that there's some people willing to buy at a higher price than this thing's trading at currently, as opposed to just buying the dip and kind of hoping and praying. So that's CrowdStrike Roots. I don't think this is the last lawsuit. I think this might just be the first one that came out. I think everybody's going to want a little bit of a bite at the apple. And then what happens is with a lot of these lawsuits is it creates precedent. Again, the very tiny amount of law that I studied in university is in a lot of these cases, what happens is a lot of other lawyers are saying, hey, let Delta fight and spend all the money and take them to court and blah blah. And if Delta wins, and all of a sudden now there's precedent for this outage cost a company money and that they were able to claw back some of that money via lawsuit, then you get the pile on. You get all the other lawyers saying, okay, now we have precedent here. We can start to fight this war. We can go from there. But that certainly starts with one, right? One definitely has to do it. So that's CrowdStrike, right? Again, same thing. I still like the sector, right? I'm still looking at this hack ETF that looks much better, right? This is the roughly the 200-day moving average down here. You can see it bounced there once before. It's coming back to that area, but even though it's doing way better than CrowdStrike is, I'm still going to wait for the bleeding to stop in order to get involved. And again, I like hack because I think, with AI and everything that's happening, cybersecurity is going to make sense. I think that what may have happened here in CrowdStrike is the whole world may go, we are too reliant on one single company. Maybe it's time that we, start to spread our defense out across a bunch of different names. So again, that's my thinking and how I'm looking to play it. But just like Steve mentioned, right, you got to wait for some moving averages to be retaken. You got to wait for some strength to show up for sure. Now, speaking of lawsuits, this is another one that's interesting that I think will probably just be more of a discussion than looking at an individual chart. But Citron, which is a well-known short seller, I I hate saying a short seller focus. He's famous for the short picks he makes and finding frauds, but the guy is mostly long. He likes to be long certain plays, but then also likes to short when he thinks he sees something of a fraud. Most people really haven't heard too much about him unless you were following that whole Herbalife scandal with what was it? Ackman and Icon were fighting over whether Herbalife was very famous a long
Yeah,
time ago.
big.
Is basically being investigated and facing charges. Now, again, he got famous a lot because he shorted GameStop once. The first time he lost money, the second time he made money. But I actually went and I watched a couple good videos about this and read a little bit of the report myself. and it's creating an interesting thing for not only traders but even CNBC and Fox Business and all of this may be affected by this. So, what the lawsuit is alleging is that if somebody buys a stock, basically he would buy a stock, he would put out a report about why he likes the stock, but before he even put out the report, he would put out a limit order to get out of that position at a profit. And the profit that he would shoot for was always way less than his target. So he'd say, "I like this stock. Maybe the stock's trading at $10. I think this stock could go to $100." But then he would also put out a limit order at $20 and then send his report out, and vice versa to the short side. He was doing the same thing with the short side. He would say, "I think that this company is a zero. This company is going to go to zero, and maybe it's trading at $10." But then he would put out a an order and say, "Well, I'm going to cover it at $5." Right, as opposed to it going to zero. And what it's alleging is not that he ever made any factual misinformation in any of his reports. In fact, a lot of the things that he said were scams were and ended up going to zero or near zero. But the question is, what they're alleging is that it's essentially illegal to say something about a company and
Front
then
run your own call.
front run your own call. And that creates a lot of things, because what I think about instantly is like Jim Cramer. Right? Jim Cramer comes on every night and he says, "Oh, I like Microsoft. You should buy it here and hold it here," and not making the call of when he's going to sell. So, like, does it extend to that? Do we get to a more of like a roaring kitty scenario where individuals, because he's trading his own money, there's no investor that's profiting or losing from it. So the idea is, are you allowed to put out profit targets but then sell before that profit target gets there?
It's a good question. I mean, I wouldn't want to even dare to venture people like Ackman or him or Citron or Kitty. In other words, having a high public figure name exposure and then talking into a microphone, because it's almost like, you know, I want my lawyer present. Don't say anything that could incriminate you
Yeah.
down the road. um, I would just stay out of that game altogether. And it's just that you never know what side of the bed the SEC is going to wake up on. Are they going to pick on the newsletter guy, or are they going to pick on the hedge fund guy? They never really seem to pick on the big people that I'd like to see them pick on. So that's a tough game. Now it's also not fair in a sense that if you do build up a following like this, should you be allowed to just print yourself free money and say, "I'm going to set my." I mean, that does to me on the surface sound kind of shady. I don't like that. And it's one of the reasons I get a little miffed about Suits on CNBC talking their book. They're just trying to exit their strategy half the time, or analysts giving you an opinion because their boss told them their preferred clients would like to exit a position. And there's so much shady contrarian back office stuff that goes on. One, I don't trust those people, and two, I wouldn't want to fill their shoes and even put myself out there.
Now, the last thing I want your opinion on is that one of the solutions being proposed by the SEC and all of this is that A, you can trade whatever you want whenever you want, but you got to keep your mouth shut. Or B, if you put out a call or you talk about a stock, you have to then leave some sort of grace period. I've heard 5 days, I've heard 10 days. And the idea is that if you end up becoming well known, and I don't, they would have to define that in some way, the market should be able to process whatever it is that you're saying and act on it with some sort of delay before you're allowed to act. So if I go, "I really like Apple and I think Apple is going to go up 20% over the next few years," then a kind of a timer starts, and they would be very easy to audit these results with your statements. Then a timer starts, and let's say 5 days, you have to hold Apple and then sell. Now, again, I'm part of the reason that I'm so interested in this is because me and you both, even though we don't have, his following, me and you both talk about stocks on here, and we talk about stocks on Twitter and all of these things. And our option would be either to not hold it at all or to come up with some sort of a clock. But that's what's being proposed. My worry is that I could say I like Apple on Monday, and then iPhones could start exploding on Tuesday. And, it's the whole "I change my mind when the facts changes. What about you, sir?" is a very, very famous saying. So, yeah, it's interesting. What do you think about, holding these public
Well,
figures regardless to that kind of task.
that's a fair argument. You know, they make lockup periods, you know, for insiders where they can't sell. But at the same time, I tell people all the time, our AI is good at picking ideas in real time, but from there, the human is better at managing them because who knows what's going to happen next. The AI can't really predict what's going to happen next. So, you know, I kind of see both sides of that coin, but I will probably just ultimately say in the end, I hate any form of regulation, and this sounds
Hmm.
just like a nightmare of regulation. So I'll leave it at that.
Yeah, I think I thought, and again, I've been thinking a lot about this. I've actually been excited to chat with you about this because I've been thinking a lot about it too. And I'm a bit of a free speech absolutist, other than like, you know, call to violence, really, or heinous stuff like that. But I think eventually you'll see what you started to see with. I think Roaring Kitty's a perfect example. His first tweet storm, you had this insane move in GameStop, and the next tweet storm, a little bit of a smaller move, and then he did the tweet about Chewy, and it was up for like 5 minutes, and then it went down. And I just think people will learn over time if you're out there and you're doing your
Fool me
speech.
once.
Yeah, right. Maybe you'll get some people sometime, but eventually, if this Citron guy kept coming out and saying this company's a scam, and the company wasn't a scam, and that just happened over and over and over again, we could think, what's that guy who's on that All In podcast? It's a really long name, Chamoth. He was the SPAC king. He was the guy who came out with all these SPACs, and he would come
Hmm.
out with a SPAC, and then it was instantly down like 80% in the next weeks or months. All these weird like Oatly and Bird and all of these weird SPACs that kind of went to zero. I just think the market regulates itself. Yes, it sucks if you got caught up in a couple of his
Yes.
SPACs, but if that guy comes back and says, "Hey, I have this wicked SPAC for you to buy," I guarantee it, they're looking at Bird, they're looking at all these WeWork, they're looking at all these companies that he was involved with before and just going, no. So, I think we agree there, right? The market regulates itself. I
Hmm.
think personally, what it reiterates is something that we always talk about at Trade Ideas, that you can't just follow someone else, because even if that person is correct, if they get big enough, they'll end up moving the market themselves, and by the time you're getting involved, you don't know if that person is getting back out. That you have to kind of take the reins of your own trading eventually, right? You have to sit down, you have to build your own plan, and Trade Ideas or a scanning software like ours is absolutely perfect to help you with that. Where the more these lawsuits happen, the more we see that we cannot trust the people out there. That everyone, if they're talking about a stock, they could have some ulterior motive, maybe not, but you don't know. At the end of the day, you got to kind of grab your own destiny, and we think that Trade Ideas is a great tool to help you out with that. Good. All right. Rant
Yep.
over. All right. Do you have anything to leave the kids with, Steve? I know it was a light week in the market, but it's earnings season. So unless we're going to just go down every single earnings play that took
No,
place.
no, earnings were big yesterday with Amazon. Apple's buoyant, Amazon's down.
Yeah.
But I spoke last week, I believe, about Tesla and how I discovered I could trade TSLS as a one-time Direxion bear and short Tesla, which I could not do before in my 401k. Um, so yeah, there's TSL. And now I'm out of 70% of it. I got out of most of it today. I took my day and a half move. Yesterday was day one. Today is half day two. And so I
Hmm.
take the and if you look at the Tesla chart again, you can see it's a perfect short candidate. I had to ride it for a week. A lot of people ask, well, what's your matter of fact, there was a great question that I replied to. They said, Steve, what's your favorite time frame? And I said, well, once the momentum gets going, day and a half. So you can see there, I had to kind of suffer a little bit of armpit, little smelly armpit action there into the
Yeah.
moving averages, and then it broke. And then once it breaks, the counter starts. Yesterday was day one. I sit on my hands. I don't take any profits. I come into today and I start looking for levels where I can start laddering out and scaling out. And like I said, I probably got 30% of that left. And I don't mind letting that wiggle around a little bit. I'll finish with this. It was last night. As one of my horrible habits of going to sleep before I go to sleep is I'll just lay on the couch and just zone out and just scroll through TikTok, which we're going to do later and do some reaction videos. So stay
Hmm.
tuned for that. But this woman was sitting in her white Tesla because they're all white with her
Yeah.
white interior and her door open. She's in California. She's hot and she's going, I wish I never bought this car. I tell you. I'm so sick of waiting 90 minutes for a charge. I'm still paying $150 in electricity, credit cards. I'd rather just pay $220 in gas. Can I have my money back? Can we do a class action lawsuit? Because I am not liking this. And it was just great. It was just kind of reaffirming my overnight short position as to why the story might be confirmed here in this little leg down we have that the buyers are not showing up for Tesla.
Yeah, and the more these ETFs I see, it's getting to the point where there's ETFs for absolutely everything. I talked about hack and how much I like this. The more I see them, the more in my brain, it just makes sense to transition a lot of personally my
Mhm.
discretionary trading over to them because why trade actually TSLA when you're right, there's a TSLS, there's a double leveraged Tesla,
Mhm.
right? Conl. I was actually looking at Coinbase, CONL, I think, is a double leveraged long Coinbase. So if I'm interested in Coinbase, uh, you know, I- not right
With
now,
conviction.
but yeah,
Yeah.
why wouldn't I just take half of a position in Coinbase, which gives me half of my buying power that I would be spending in Coinbase to do something else, right? Anytime I see these leverage ETFs, that's quickly what I think about is that I could either commit maybe $10,000 to Coinbase or I could do $5,000 in Conel and I'm going to get the same risk and I'm going to get the same return, but it's going to take up less of my buying power and then I have that extra hypothetical
And
$5,000 to put somewhere
And a
else,
lot of
right?
people like a lot of people like to trade these weekly options, which are very volatile, and you and I don't really get caught up in that. But when
Yeah.
we have conviction, we want to step on the gas a little bit, and those levered ETFs are nice to have.
Yeah, and they're out for everything and fairly liquid and we were talking about SMR and
Oh,
NNE, then I found I think it's NRL or
let me
NLR.
just add,
Yeah.
MSFD. I didn't even talk about that one. I bought that one a couple days ago. I came in long the Microsoft one time
Yeah.
short. I'm out. Actually, no, I got 30% left of that one too. But I'm going to wait and see what's going to happen over there. But it's
Yeah.
nice to be in profit taking mode for once on the short side in my 401k, my retirement account. I'm not used to that. And we also got a nice little benefit, which as you know, the T plus one.
Yes.
I'll sit in a trade and I'll go like, do I really want to tie up this when I can just sell this and add, XK to my account buying power immediately tomorrow? Let's just
Hmm.
go ahead and sell that now. We'll refresh that buying power. And it's really given a whole new way of life for somebody like me who trades my self-directed retirement account because there's many restrictions.
Well, and it's funny because I think you probably were caught up in this as well. In the financial in the GFC, there was FAS and FAZ, and these were the start of it, which were three times bullish financials and three times bearish financials, and everybody was trading these because you had in 2008 2009 you had these insane moves in financials. This bank would go under, that bank would go under, and eventually it got to the point where a lot of all I was doing is I was looking at the XLF, and this is what's being leveraged is you would have the XLF up on your screen, and then you'd have two order entry panels, one for FAS and one for FAZ. And if you thought one was going to move, you would trade the other. And then I just kind of completely forgot about a lot of these leveraged ETFs for the longest time. But now that there's just being more and more of them, and they're single stock and all of these things, it makes me more interested because I think there's more pure technical analysis in the ETF world than there is in the single stock world sometimes, just because you're getting that entire basket of names. So NLR was the one that I was talking about there, where this has some SMR, which both me and Steve were in and had good trades on, and now we're out. And that NNE and all of that, it's going to contain all of these nuclear and uranium type things. So just something that I wanted to bring up because Steve was mentioning about these ETFs is start to play around, guys. Like if you're like Steve and myself, where you do a lot of trading in a tax advantage account, we are seeing a pullback here in the market. This pullback could continue for some time in the market. Start to look up these inverse ETFs, and Granite Shares is the maker of a lot of them. What was it? MSFD. That was
MSFD was the one I was in.
Drextron,
Yeah. Drexion.
TSLS. Yeah, so look up this Drexion and
Drexions are working.
yeah, and Granite Shares, and just go through. They have lists on their website. You can go through, and the beauty of it. when you're doing your scanning with trade ideas, if you see a company like this that you end up liking to look at, just go see if there's an inverse share somewhere there as well. Because yeah, you might be able to get short by being long, or long by being short. So, all right, Steve, I think that's a good place to end it. What do you think?
I think I'm good.
Awesome.
Hopefully
All right.
they like that.
Yeah, so the one thing I love about what we're doing here, it's yeah, we just went off into tangent after tangent. We were opening up this and we're saying, there's not a lot going on, but it's the beauty of the market. There's always something to talk about. So we will obviously be back. Oh, actually, not next week because I am
Hmm.
on PTO, but the week after,
Great.
we'll be back. So always stay tuned to Sunday. Maybe we'll find something that we can put out for you Sunday at the same time. But as always, thank you guys for coming by. If you made it this long, give a like, give a retweet, share it with your grandma, whatever. We love to have you guys by, and we'll talk to you soon.
See ya.